Saw the markets rising, I just had the cave. Bought that stock at the tippy top. Didn't know the ride was about to drop. I buy high, I sell low, watching all my money go. Should've held tight, let it grow, but I panicked, sold it in the undertow. Now I'm sitting here without any dough. Simmer back, trader blues real slow. They said just dollar cost, don't time the tide. But I saw green candles and I lost my pride. Sold it in a dip when the fear took hold. Locked in the loss, now my dreams feel cold. I buy high, I sell low, timing markets like a rodeo. Should've stayed calm, gone with the flow, but I dumped it all when it started to blow. Now I'm back on let it feeling low. Singing the band, Trader Blues solo. If only I'd listened to Jack Bogle's voice. Stay the course, kid, that's the smarter choice. But I chased returns like a moth to flame. Now my portfolio's feeling shame. I buy high, cry low, lost my gains in one bad show. Learned my lesson, moving slow, no more panic when the candles go. Next time I'll chew at compounding glow and leave behind them trader blues I know.
Gold prices at essentially all-time highs. And not just in dollar terms, but relative to other commodities as well. We're going to talk a little bit about that and maybe touch on some of these deals that are going on in the AI space and whether we should be worried about what's going on in financial markets today on Open Interest. Hello, everybody, and welcome. I'm Mike Coe, joined as always by my co-host for Office Hours, Professor Mark Guthner of Rutgers. Mark, how are you today?
Pretty good. Weather, I don't know why, is very warm here in New Jersey, so I always like hot versus cold weather, so I'm in good shape.
Well, that's good news.
Yeah.
You're in good shape. But what do we think about the markets here? There's a lot of weird things happening at the same time. So Bitcoin has resumed its climb. JP Morgan came out with a new higher price target for the year end in Bitcoin, 165,000, I believe is the number that they came up with. Gold has now surpassed its all-time highs in real terms that it hit in the 1970s. I actually have on my screen right now the ratio of copper to gold. And actually, I don't know if this is the maximum. This is going back to, this goes back to 1987. I'm going to just put a little annotation in here. And this is where we're at right now. So that's the ratio of copper to gold. We could probably compare it to other things. We're probably going to get charts that look vaguely similar. And in the midst of all of this, of course, we have equity prices continuing their ascent in general. We do see valuations, so I'll just pull this up as a reminder for everybody. But those who have tuned in and listened to us in the past know that we've touched on this a few times. I'm just going to look at the price of the S&P to forward earnings. We'll get rid of the trailing earnings here for just a minute. So this is the long-term chart of that. And as I've previously mentioned, I would urge folks to, I'm not going to say dismiss, but this period right here, you probably can't see my, I'm going to see if I can find a way to share it. Well, anyway, I'm right where this icon is showing up. This is during the pandemic. I would probably dismiss the pandemic peak because, of course, the economy shut down. When the economy shuts down, earnings plummet. When earnings plummet, the PE ratio, all else equal, skyrockets. And we were not at all-time highs in terms of prices at that moment. So I really think at the moment the only comparable period that we have in the post-80s era that comes close to what we're dealing with now is the late 90s. And one of the things that you were looking at this morning, Mark, that you thought was also kind of curious, these aren't completely related party transactions, but you were taking a look at some of the things that are going on in the AI space. Do you want to just talk briefly about the sort of the biggest deals that have hit of late and what's curious about them by your way of thinking?
Yeah. Well, one of the things that caught my eye when they was talking about these very large deals between these very large players in the AI space, it reminded me of what took place in the late 1990s with all the tech and, well, really mostly the dot-com names, where people were starting new services, and all these guys lived in the same town, San Francisco. They all knew each other socially, and deals were getting struck like, hey, why don't you buy $100 million worth of what I sell, and I'll buy $100 million of what you sell. And since they were services and not physical items, it was kind of an easy thing to do. And while nobody made money, quote unquote, on doing that, it puffed up revenue. And with revenues getting puffed up, people were saying, oh, okay, these companies are growing fast. Eventually, they'll turn it into those revenues into profits. And so they pushed up the share prices. So I get a little nervous when I see this, things, I don't know if they're the same kind of deals, but in any event, OpenAI is doing a partnership with AMD. This is sort of the latest thing. And AMD is going to deploy up to 6 gigawatts of their GPUs and provide those to OpenAI so that they can have additional services, AI computational services. And in return, OpenAI is getting an opportunity to buy AMD stock, 160 million shares. They're getting warrants, but they're getting the opportunity to buy the shares at a penny. Now, as you pointed out when we were talking about this before the show, is there's a knock-in feature, so the price of AMD stock has to rise substantially, various levels, but the highest level is $600 a share. So why would AMD do this? Because if they're going to issue 10% of their stock, so 160 million shares when the price is up around $600 a share, they're giving away close to $100 billion worth of equity. And so this thing has me scratching my head because, yes, they're going to put this capacity into place, and they'll be able to sell some of that capacity to other people and not just OpenAI. But there aren't any details of what kind of revenue and profit opportunities are there by doing this transaction. So I see something like this and I get a little bit nervous. Now, this comes on the back of a deal between OpenAI, Oracle, and NVIDIA, where Oracle is essentially going to build and run, if I understand the deal right, the disclosures seem to be vague to my eye, but if I understand the deals, about $500 billion investment is going to get made, and for OpenAI to buy these computational services, this will be run by Oracle. Oracle will get $300 billion worth of revenue over 5 years, and NVIDIA, everybody's going to buy NVIDIA chips for this build, And at the same time, so NVIDIA is going to have a big sale, but at the same time, NVIDIA is going to take $100 billion and buy into
And
this
invest.
data center. So again,
So,
the situation, that's how I understand it. Now, I could easily have this wrong. There could be, but I went through the disclosures that I could find and the 8Ks that I could find. And so some of these deals they look a little circular to me. So they have
mm,
me a little bit nervous. And to cap it all off, which I thought was pretty interesting, was on Friday, Jeff Bezos was speaking, and his view is that somewhere between 10 and 20 years from now, um, that the gigawatts, many gigawatts of data center capacity is going to get put into space and powered by solar. Um, that's quite a thought. And it just seems that when this kind of stuff is
so we're going to
going
have a
down,
bunch of data centers floating around in space. I imagine that's fairly good for companies like SpaceX.
yep,
If that were true,
yep,
because it has to get up there somehow.
yep, somebody's going to push
And
all that.
SpaceX is pushing the lion's share
Hmm.
of launches
Yeah,
by a substantial margin. So I have a chart up here. This kind of speaks to what you're talking about. This is just about Oracle. So Oracle is down today. One of the reasons that it is down is because they disclosed that they lost $100 million on their rentals of the NVIDIA Blackwells.
Hmm.
So I think that just startled folks who were thinking, oh, wait a minute. You mean you're losing money? You're building out these data centers and then you're losing money leasing
Yeah.
access to them. That doesn't seem like a very good business. It's early stages. I don't know that that's representative. One of the things you pointed out, rightly, is that those losses, depending on how they depreciate the equipment, that there could be accelerated depreciation involved.
yeah,
That's a possibility. But I want the reason I want people to look at this chart is that it was very recent that Oracle had this huge run, and that run was on the back of basically this huge deal that they were doing.
hmm
If you take a look at it now, the stock is up from its prior highs before any of this was announced. So we're now going back to early August, so before any of these big deals were announced. The stock is up now only about 6.8% over that time frame. And that was just the prior high. That was August 6th.
yeah,
So if we take a look then at the returns for the S&P over that same period, it's up 5.5%. So basically, there's 1.5% of outperformance versus the S&P before all of this was announced for Oracle. So it seems like most of the bloom is off of that rose. That's the first thing.
yeah,
The second thing, and by the way, I encourage people to look at this stuff themselves. So what Mark is alluding to with these warrants. So right now there's $1.6 billion shares approximately of AMD outstanding. So 160 million shares, which is what the OpenAI deal would provide them in warrants, is essentially 10% of the pre-diluted company. So warrants are, for those who don't know, warrants are effectively an option. The difference between a warrant as an option and the kinds of options that we conventionally think of is that a warrant is not something that is granted within the secondary market. It is granted by the company itself. So a warrant gives the holder of the warrant the right to buy the underlying shares from the company. So when they do that, unlike if somebody buys a call option, the share count actually rises because the company is going to issue shares for basically to satisfy the warrant. Now, by itself, that's not necessarily a bad thing. Warrants, in usual circumstances, the warrant has a strike price, and so the company will be issuing the shares. It may be dilutive. It probably will be dilutive in the event that the warrant is exercised. That would be the normal circumstance. But there is usually money flowing into the company. However, as Mark pointed out, the warrants in the appendix for the deal transaction, which you can find on AMD's website, indicate that the purchase price for the shares is going to be a penny. Well, a penny times 160 million shares is 1.6 million. That's the lowest amount that you could have. That's the par value of the stock. So effectively, they OpenAI, in the event that they exercise the warrant, at least under those terms of the agreement, would essentially be acquiring the stock at the par value. Now, as we previously pointed out, there are vesting clauses. The vesting clauses are associated with the delivery of 1 gigawatt of capacity, 6 gigawatts of capacity, the share price hitting $600 a share, which I would point out would put the market capitalization of AMD on an unadjusted basis, right? So, the reason I say unadjusted is because, the number of shares outstanding, this ebbs and flows as companies grant employee stock grants and things like that are going on. So the share count might be rising and falling over the course of time. How many years are in this deal? Is it
5 or 6 years, I think, they have to get this done.
Yeah, but I think the important thing is that we sort of back of the napkin this and just sort of keep it round numbers. Round numbers at $600, you're talking about $1 trillion company. So effectively, they would get to buy 10% of $1 trillion company on a pre-diluted basis. So, and actually, if we do that minor adjustment, then it's really not going to be 10%, because it would be, instead of having 1.6 billion shares outstanding, you're going to own 160 million shares of 1.76 billion.
Yep.
Right?
Yep.
So, they would actually own 9%, just over 9%, assuming no other share count adjustments, of the post-warrant exercise business at $1 trillion valuation, or about $91 billion worth of the company. What's interesting about that is, now, we don't know every bit of these clauses, and there's also a curious formula that's in the 8K that I encourage people to look at. So the 8K, you can just go to the SEC's website, you put in AMD as a ticker, they're the ones that filed it. If you go to the AMD website, what they put on the investor relations website seems to have less detail, or at least what Mark found was just an appendix to the 8K filing. But if you take a look at that, you'll get some additional details. And like I said, we were going through this before we went live, and we hadn't completely sorted our way through it. But it is a very curious arrangement that you have this sense, I think, by the market that this is a huge deal and it's going to add so much shareholder value. But it does appear that a material portion of that shareholder value is actually going to be doled right back out to OpenAI. And one can understand how a deal like that would get made. Sam Altman saying, listen, I'm going to give you the biggest deal in the company's history. Remember, this is a company, AMD does what? 30 billion-ish in revenues a year. So, yeah, our trailing 12 months, 29.6 billion. Full year estimated revenue estimates at 33 billion, 40 billion, 41 billion for next year. So Sam Altman goes to, I'm sorry, is it Lisa Su? Linda Su?
Yep.
Lisa Su says, I'm going to give you the biggest deal you've ever had, and it's going to add huge enterprise value. And I think deservedly we should be entitled to some of that value. If it adds as much value as we think it will, if we double the value of your business or more, in this case, triple it, right? So the company was trading less than $200 a share. The last part of the vesting, that sort of knock-in feature, has a $600 a share number associated with it. So if we triple the value of your business, we'll be largely responsible for that. We think we should own some of it. So we want to have the right to buy 10% of the company for nothing, effectively. But it is a very strange arrangement because the economics of this become a lot less compelling from an investor's point of view when you realize, okay, they're going to give me $100 billion worth of revenues, and I'm going to turn around and give them almost $100 billion worth of value in the company, assuming that we get, the kinds of returns that they're shooting for. It's not as compelling a deal. And then you've got this Blackwell thing, Oracle losing money on it, and it turns out maybe it's not as compelling a deal. I guess it feels like there's more enthusiasm for the economics of these transactions than really exists underneath the hood. Is that kind of your assessment?
Yeah, well, there's everybody thinks this is going to be the most gigantic of industries, and they might be right. And there's a mad rush to be first.
I believe it.
Yeah,
I mean,
the fear. Some of this, I think, is driven by fear because they think that whoever perfects AI first rules the world. And maybe they're right. I don't know. But essentially, that's getting people to throw caution to the wind, and so these build outs are just super remarkable. And it makes you wonder if everything's just going too far. And the reason why I brought it up is this other thing about Jeff Bezos and outer space. I mean, the enthusiasm for the space, I don't think could get any higher. And
that's kind of like it's literally peak, right?
Yeah. So,
it's a rocket ship. This story is a rocket ship. We're going to have the data centers themselves on rockets. It's
right.
It's almost
in behavioral.
If someone was going to sketch out
yeah, go ahead.
Irrational exuberance, it would look a lot like this, wouldn't it?
And we have the skyscraper index for behavioral finance, and what we find if you go back in history. The stock market peaks occur when the next biggest skyscraper gets built. So whether it's the Empire State Building in the 30s, and then the Twin Towers in the 80s, and then the Petronas Towers in Malaysia, and then Burj Dubai, and in Dubai the buildings get
I think the Twin Towers was actually the Nifty 50 area.
Could have been the end of the 70s?
Peak in the 1970s,
okay.
Yeah.
So the idea,
early 70s.
The idea is these buildings get built when people are super optimistic. That's when they lay plans. Markets are going up. By the time the buildings get finished, that whatever cycle is in place is kind of running out of juice. And kind of marks a top. So does this mark a top? I don't know. Time will tell. But it's one of those things that keeps me on the edge of my seat. And
I think right now the biggest building project is not up but out. Isn't that the project that Saudi Arabia is building?
Oh, the line?
Yeah.
Yeah, that's pretty wild.
That is an incredible. For those who are not familiar, I'm sure everybody is, that the plan, part of their economic diversification plan, folks will remember that Aramco first tried to do a sale, and they did ultimately have an IPO, and Aramco was at the time the largest company in the world. And they plan to build something called the Line, which is and I'll just read it here. It's an indoor sort of one building city that is going to be built in a straight line. And the idea, it was going to be all this mirrored thing that was cutting across Saudi Arabia. And the idea is that this is going to house 9 million people in essentially one contiguous building that is 170 kilometers long.
Yeah.
Over 100 miles long. One building over 100 miles long. So that would be a building, essentially, that would stretch from New York to Philadelphia. maybe a little bit further.
Yeah, it's a pretty crazy idea.
It is. I mean, it's very. I guess they have. So 2.4 kilometers is the first section that's being constructed. But maybe that is also another one of these sort of warning signs, if you will. What do we do about this? Well, actually, let's go back to your first point, which was you were asking me about the to pull up the gold copper ratio. What does the gold copper ratio tell you?
Well, I stumbled upon this the other day, and there's lots of things that are now at super low prices relative to gold. So does that mean gold is overpriced, or does that mean that there's going to be a massive catch-up and all these other assets? So if we take a look at the price of oil relative to gold, it's at all-time lows. We just did the price of copper relative to gold. It's over at recent lows. And as shocking as this could be, housing relative to gold is not expensive. And anybody horsing around the real estate market knows that real estate is relative to incomes is brutal, is very expensive, right? So it makes me wonder if we're going to have this massive bout of general inflation, or is the price of gold about to run out of steam and do a big give back? One of the things.
Incidentally, if someone's looking at my chart, I don't know if it's showing yet. So I have the oil to gold ratio on here, and you're going to say to yourself, "Oh, wait a minute, it was higher before." Well, once again, we have a throwaway data point here.
Yeah.
This was early 2020. This was the pandemic. This was the period. I'm just going to hover here. So right where that little label is. Now, this is when oil basically absolutely got crushed during the pandemic because the economy shut down and oil demand suddenly plummeted. Now, this is the gold to Brent ratio. If this was gold to West Texas to WTI, which is the NYMEX CME contract, it would be even more extreme because that actually settled at a negative number in April of that year. But you do have to kind of throw that away because that was an unusual circumstance.
Yeah.
It was sort of a supply-demand imbalance that was quite unusual. But I think we can also say that even if it wasn't a result of the pandemic, you'd still be concerned just because of how extreme things have become. So what does this tell us, though? So one of the things that this would suggest to me is that if everything is getting cheap relative to gold, maybe even equities are getting cheap relative to gold. As much as a tear they've been on, this was a point I think that Peter Schiff was making very recently. And actually, we can probably compare SPY to gold over here. I'll just do this, just SPY versus gold, the ETF. And say, okay, well, how have these things done over the course of the last couple of years? They're basically working in lockstep right now up until gold basically outpaced it. So it's up about an extra 10%. Let's go back a little further.
Can you go back to 2000? Because I think since 2000, gold has outperformed stocks.
Yeah, by a lot. By a lot. This is back to this is 20 years right here.
And if you listen to
the madness,
the financial press or whatever, or your prognosticators, that's not supposed to happen, right? Gold is a relic of a bygone past, and stocks are the place to be. You could have just bought gold and gone on vacation for the next 25 years. Instead of toiling over balance sheets and income statements and 10Ks and all that other stuff, trying to find good investments. I thought when I stumbled upon this, I thought, that's pretty crazy. But it's just And never say never.
I would like to hear, and I'm sure he has said something about it recently, and maybe I just haven't been keeping up, because Warren Buffett just did a deal. It was not a big deal. It was like a $10 billion deal within the last week or so. My bigger point, and that's $10 billion, just for everybody's edification, is nothing for Berkshire at this point, because I think they have the better part of $400 billion in cash right now. So this 2.5% of their cash essentially is the size that 2.5% of their cash, their readily available cash, was that deal. It's basically nothing. I would be curious to hear his take on this, because one of my favorite Buffett quotes with respect to gold was, he's never been a big gold bug, and who knows how much gold he actually, maybe the house in Omaha, he's actually got some gold in the basement. It wouldn't surprise me, wily old Warren. But one of the comments he made about gold is, he said he never really saw much use in it, because the only thing it does is just sit there and look at you.
Yeah.
And this makes sense. This is a guy who's in the insurance business. The insurance business throws off cash.
Yeah.
He liked businesses that threw off cash, because then he could use that cash to make more investments in other companies that that threw off more cash. And that has been his approach. Buy things, hold them forever, use the excess cash, build an investment portfolio, and also, on top of all of that, always have a ready hoard available, so that you could be the source of capital of last resort when everything went sideways, and then you could start to buy things at very attractive prices, whether it's Goldman Sachs preferred or whatever. I mean, and even things that he said he never wanted and didn't understand, he stood ready, willing, and able to buy. For example, when long-term capital management failed, Merriweather went to Warren Buffett and asked for a bailout. And he said, not interested, I don't get it. And apparently he spent the next week working with Goldman Sachs, figuring out exactly what they held and what he would be willing to pay for it. And so I would be kind of curious to hear his take, but I think even if he doesn't provide one, looking at his cash balance is pretty much as close a view as you're going to get to his view of the world. Because nothing tells you more about how he thinks about things than how he spends his own money. And he's not spending it.
Yeah, well, that's true. He's waiting for that day when there's a wipeout in equities, and he can go buy stocks at substantially lower prices. It's funny, Michael Saylor has pounds the table and said, Warren Buffett is losing. He had the number X billions of dollars of purchasing power every year because of inflation, because he's got his money sitting at Treasury bills, earning, let's say, 4%, and he's paying his corporate tax rate of state and federal taxes. Let's say it's 25%. He's getting 3%. So to the extent that you believe, so he's breaking even relative to inflation. So he's got a bunch of cash sitting there. And if he could put it in something else that beats inflation, that's what he's giving up by sitting here and being patient.
What do we buy? What if you're a little less patient than Warren, or even if you are as patient as Warren and you're saying, what am I going to be looking at? What should we be looking at? You were talking about energy generation, I think you were talking about earlier.
I think he's got some exposure to the electrical energy space, and that would probably really fit with what he likes to do. It's a business that I'm sure he understands. It's one that's going to grow because our biggest shortage for AI is
but you just generation. Said that Bezos said that it's all going to be solar.
Yeah,
it's all going to be solar in outer space.
It's solar in outer space. God, hey, listen, he gets to say whatever he wants because he's one of the richest people in the world, and who knows? He may be right. Maybe he knows something the rest of us don't.
He has his own space company as well.
Yeah, he knows something the rest of us don't probably. But he could be looking in that space a lot more in the electrical generation space, because the build is going to be huge. The needs for capital are going to be big, and utility stocks have been doing pretty well over the last few years.
Yeah, I've got Vistra up here because I think Vistra was arguably this was one of the probably the highest flying names in the space.
Let's see if I.
We're looking at a 5-year price chart here, and from May of 2021, so just a little over 4 years ago, 4 years, 4 months ago, and the stock's $200 now.
Yeah.
This is not the kind of thing that people normally would have associated
with a utility stock.
With a utility. That just almost doesn't seem believable. What other ones would you look at? I mean, we could take a look at
Southern Company is one that I've always liked. Dominion, S-O and
Dominion?
D.
Okay, we'll look at Dominion. Let's look at Dominion. I've got Constellation up here.
Constellation, another good name.
Yeah, so this is Constellation.
And
is it here again? I mean, we're looking at something that's an 8-bagger.
Yeah.
Over the course of the last, not even 4 years.
Yeah.
These are incredible numbers, I think.
Yeah, for utilities,
does it make sense for people? Yeah, does it make sense for people to say, well, I don't know, does it make sense to chase these winners? Or does it make more sense to say, what if I just bought something like Utility Select Sector Index or a proxy like XLU, the ETF?
You could.
The logic of this being that, maybe a deal is done in a way that people are not anticipating. That if you're hoping for the next windfall, it's probably not going to be in the Constellation that's up 8-fold or in the Vistra that's up 12, 14-fold. Maybe it's going to be in something else. What about solar? By the way, is there a play for solar in here?
I listen to a lot of podcasts, and there are some guys out there that are saying that they think the energy problem is partially solved with wind and solar, and the biggest reason why is the backlog for jet engines, which are what are used for natural gas power plants, are back ordered for like 5 or 10 years for the demand that exists today. That is the bottleneck for building more power plants at this point in time. When I used to finance power plants in the U.S.,
below its all-time highs.
Yeah, when I used to finance power plants in the U.S., you could complete a build in 18 months from the day you broke ground. So regulatory is pretty straightforward for natural gas. So maybe you spend a year on regulation, getting your permits and all, getting a natural gas supply agreement with the appropriate company, and because they've got to build their pipelines and whatnot, and then you've got to get your permits to get connected to the grid. So you get all that done. Once you get all that done, you can go build. 18 months, you're up and running, and you got 500 megawatts of power up and going. And that was pretty routine. We financed quite a few of those kind of situations in the U.S. And we got tons of natural gas in this country, so that's the place where we're going to go.
And it's very cheap. I wonder whether we should be... So just thinking about the energy thing, rather than chasing the winners, maybe getting long utilities, which, by the way, would also potentially have lower beta in the event that we got an equity market downturn, or has historically done so. A little less clear. But that might be a place to play. Natural gas demand should remain elevated. And it's, natural gas prices, $3 for natural gas. That's what natural gas was trading. It's actually even slightly lower than what natural gas was when I stood on the floor of the New York Mercantile Exchange in the natural gas options pit.
Yep.
That was 24 years ago.
Yep.
Uranium, that was the big play, and I think it sort of came back to life again more recently, right?
Yep.
But, if we can figure out how to get more nukes in place, nuclear power plants, that is. Now this is kind of it's a pretty steep
Yeah.
an uncorrected ascent that we're seeing right now in uranium. But the company, and I've asked you about this, I remember years ago you and I talked about this one. The company that I have said on more than one occasion that I happen to like in the space is Fluor.
Yeah. I used to work for Fluor.
Yeah, because Fluor, engineering, construction, procurement, they have a huge stake in NuScale Power, which is that small modular reactor startup that's pre-revenue. They are heavily in the business of commissioning, decommissioning, and recommissioning nuclear power plants. Yeah. And it wasn't trading at an insane multiple. Yeah, I mean, look at this. It's trading less than 20 times forward.
Yeah.
And, what do we got here? So 400, we'll just round it up and call it $425 million in free cash flow over a $55.7 billion enterprise value. That's more than 7% free cash flow for full year 2026.
Yep.
You like that play?
I do. They have the expertise. I mean,
it was 15 times when I first recommended it.
My only thing with nuclear is the regulatory risk is high, and maybe with the existing administration, you can get it done. But let's say Democrats win in a few years and they retake the White House or the Congress, they might put the kibosh on it. So I hate investments that have regulatory uncertainty. It's hard enough to get the economics right, and then you throw a curveball in there for how a politician feels about it.
Well, you think about the pipeline projects from Canada and all that kind of stuff.
Yeah.
I mean,
on again, off again.
Massive projects, many years to complete, massive capital required to do it, and then they basically said, "Yeah, it's not going to happen."
Yeah, and
we're just going to make sure it doesn't happen, and without any consideration for how we are going to then deal with those power needs.
Yeah, there's a mine up in Alaska that has been trying to get permits for a few decades, I think now, and I think they have the largest copper and gold deposits on the planet, and they can't get it through the regulatory process because they're worried about harm to fisheries or the wildlife or things like that, and I appreciate all of that, but that's I don't want to invest my money in this because it may be another 20 years before we actually get permission to do it, and what will be the political what's the environment in which we're in? Oh, there's a massive global shortage of copper, and so that saves the world. Or we need a lot more gold to back our currency or something, or whatever it is. So I wouldn't want to bet on it, but it's it's a remarkable resource that remains untapped. And all the jobs, those are really super good, high-paying jobs to go mine that stuff too.
Speaking of high-paying jobs, so government employees in the United States, the mean compensation, I believe, for government employees is substantially higher than it is in the private sector. Now, granted, the people who are at the highest levels in the private sector make considerably more than the people at the highest levels of government. Unless your last name is Pelosi, maybe. I don't know. But it's my understanding that the OMB is now saying that federal workers may not be entitled to back pay if they were furloughed as a result of the government shutdown.
Yeah.
So here we are, talking about all of these other things that are going on. Now, we've had government shutdowns in the past. We've had government shutdowns when Trump was in the White House. We had one during his first term. I think it lasted 35 days. I would assume that maybe this back pay issue might be a little bit of an attempt to apply some additional leverage by the White House on Democrats to vote for the clean resolution.
Yeah.
Which is a reminder, something I talked about yesterday. The Republicans were basically saying, we want to keep the government open, give it 3 months, I think, was their clean resolution, was for 3 months continuation.
Yeah.
So we're not asking for anything, you don't ask for anything, and we just keep going for another 3 months while we sort things out. The Democrats said, no, we're not going to do that because we have certain demands that must be met. And one of those demands was the sunset provision for elements of the Affordable Care Act, as I understand it. Now, this does affect things like reimbursements on Affordable Care Act healthcare plans, so there was supposed to be a subsidy payment. But the other issue was, and this is where the Republicans were taking issue with it, was that, of course, federal healthcare spending goes to state Medicaid plans. And state Medicaid plans in some states are paying for illegal immigrants' health care,
Yeah.
like they are in my own home state of California, something that you don't have to take my word for it. You can just go to Medi-Cal. Medi-Cal, by the way, is state of California's name for their Medicaid program, and just see what it takes for an undocumented immigrant, which I think is the term they use on the Medi-Cal website, to receive health care. I can also say that I've personally experienced this. Recently my son had some issues. We had to go to the emergency room, a place where I had the displeasure of hanging out for 5.5 hours. And during that time, I got to see a lot how California emergency rooms work, or more accurately, how they don't work, the way things are.
Mm-hmm.
And this, I think, is a big difference of opinion that people have. And again, I'm not, and I know you don't really have much interest in doing that either. This is not an opportunity to go on some kind of a political rant here. I don't really have much. We're more interested in the markets than we are in doing anything like that. But, I think people need to be honest about what's actually happening before they can begin to have a debate about how it gets solved.
Yeah.
And so I want to just get your thoughts. What do you think the chances are that we can get this shut down, wound up? Do you think Democrats will get what they want, which has fiscal implications, big fiscal implications potentially? And gold prices are, to me, what I tweeted or posted, whatever, yesterday, was that to me, gold prices are saying you cannot run, with this degree of fiscal irresponsibility indefinitely, that there are consequences at some point. That's what the gold markets, to me, is saying. And what are your thoughts on that?
Yeah, to me, gold is like a confidence indicator. So when it's going up, then they don't have confidence in the political system. It's not just here in the U.S. There can be other things going on. One is, remember, when the war with Ukraine and Russia broke out, what did the Bank of International Settlements do, and IMF, World Bank, and everybody else? Is they froze Russia's assets, which I think was about $500 billion that they were holding outside of Russia. And now there's all this talk about, well, we should take that and give it to Ukraine. So that is the first time that has ever happened in the history of finance, where a country was basically their assets were seized and removed from the international banking system. So that causes other countries to say that, yeah, I might be in the United States' good graces today, but that doesn't mean in 10 or 20 years I'm not, or Europe's good graces, and they don't go take mine. So what would central banks do? Well, dump your treasury bonds and buy gold. And I think that's something that's been going on for a while now. And we see it in gold reserves in places like Japan and China, other countries where they're holding fewer government bonds now and treasury bonds and putting that money into gold and then having that gold sit within their country. We've had a bunch of countries in Europe
Repatriation.
who repatriated their gold out of New York and took it back to Germany, France, etc. So I think there's multiple layers of things going on in the gold market.
But does that, I mean, so the interest, one can understand, I mean, it's kind of like the oldest hard money that there is, right?
Yep.
So one can understand its appeal. Like, it's lasted for millennia.
Mm-hmm.
But the problem, and there are some, is that gold, number one, there's not enough of it, right? So you can have massive gold reserves at these central banks, but in the scheme of things, it's still small relative to the overall money supply.
Yeah.
That's the first issue. The second issue that I see with it is that it's not that convenient to transact in. Now, the way banks traditionally worked is that, you had sort of these, demand claims on gold held on deposit at various banks.
Yeah.
That's essentially what paper money was originally, It was basically, it was like a traveler's check.
Yeah.
Said, I have gold in this bank, and this represents that gold that I have over there. And in some ways, as long as a bank was considered a solvent institution anywhere in the world, in some ways it almost didn't matter what currency you held. It only mattered how much gold it actually represented. Yep. Now we get into kind of a confusing territory. The other thing is that now our banking is electronic, right? And it's a little messier. And do you think this accounts for the rally that we've seen in the last couple of days anyway with Bitcoin, and maybe in part that's why JP Morgan so significantly raised their price target, is that there is more belief that this could also serve not just as a, we see a lot of companies using it as a treasury asset, but that it may become a more significant treasury asset even by use by governments potentially.
Yeah. So what I teach in my the kids in my digital asset classes, we discuss the existing monetary system of gold, the paper monetary system, and it boils down to a real simple saying: gold is good at moving value through time, but it's really lousy at moving value through space. Hard to move it from New York to Europe or something. Paper money, on the other hand, is very good at moving value through space, but very bad at moving value through time, because we know that there's few things that we know with certainty, but we know our dollar is going to be worth less next year than it is today. That's what we know with pretty high certainty. And what the Bitcoin folks like, because there's a limited supply, it's the only asset in which if the price goes up, no more is going to come out of the ground, right? So if you're at gold and the price of gold goes up enough, there's going to be more people looking for gold, and they'll pull it out of the ground. If the price of oil, same thing. If the price of a stock goes up, there's certainly a temptation for the company to issue more shares and capture some of that higher price. So gold, Bitcoin is good at moving value through. We're going to find out, I should say, if Bitcoin is going to be good for valuing, moving value through both time and space. Because if it does, it'll be a superior layer one, base layer to a monetary system. Which is what gold does today.
Speaking of, so when prices of a commodity rise, the producers of that commodity tend to pull more out of the ground. Yep. As you point out, integrated oil companies, one of the ways to value them has long been on their reserves. Yep. Right. The logic of that being that if you want to figure out what Exxon is worth, they document on their balance sheet what their reserves are, and their net additions or depletions over the course of a year. It's one of the more important metrics that we think about. Gold miners, similarly, you have some notion of reserves. The miners are now up 100, and at least by this, which is looking at it on a monthly basis, up 128%.
Yep.
Year to date.
That's ridiculous. Yeah.
It's just incredible. But when you take a look at how it has performed since its prior peak, which took place in 2011, it actually is up far less. So my question to you might be, what's your thinking? One of the issues that I've long had with the miners, and that I find a little bit troubling, is that natural resource companies many of them tend to operate in politically unstable environments. And we are in an environment right now where many governments are in financial distress. We are in an environment where many governments' currencies are being viewed with skepticism. And there's a lot of political turmoil from both sides, even in the United States, certainly in Europe, not even just the traditional places where such problems tend to exist all the time, like the continent of Africa, all throughout the Middle East. Obviously, we've had distress for considerable periods of time. Political tumult is nothing new in South America. So if we exclude Australia and North America, the only thing that troubles me about the miners is this worry that I have about appropriation. What do you think?
Well, expropriation is always a problem. When I used to finance mines, depending upon the country, we would buy political risk insurance from an export credit agency or the World Bank or somebody like that who would at least give us our money back and repay the loan if a mine was expropriated. It's a problem everywhere. Most people don't realize that when the price of lithium took off, SQM was a big Latin American miner. Even though they were paying a lot of money in taxes, the local government said, "Hey, this resource should be going to the people," and they put some measures in place that would put that mine at risk, and so they take away from the international mining companies that developed it. So this is a big problem, and one you've got to be cognizant of. So there, some companies like Southern Copper, they're not doing lithium, of course. They're doing copper and gold. Freeport-McMoRan, these really big players. That's kind of where I focus. So it's them. There's a couple of big Canadian firms that are escaping my mind at the moment, and BHP out of Australia. That might be one of the biggest. I just kind of, when I think about the mining space, I just go with the very biggest guys, because if you screw over a small miner, you're never going to see
an ADR.
What's that?
Is there an ADR for BHP?
I think so. I thought so, because
I had thought so too. I kind of remembered.
But you're not seeing one?
Let's see, BHP. Oh, here we are. There's the depository receipt. Right here we are. Just trying to help people out who are probably not going to trade the Aussie Ords or trade it.
They've got a great canteen, by the way. When I used to go down to Australia, we'd sneak into their canteen and their corporate headquarters, and they had a great canteen.
So, what do you think about equities here? I mean, this is the big. This is what we talk about most often, and to your point, the dollar is not going to be appreciating over the next 5 to 10 years. people want to own anything but dollars. And the net effect of that is equity prices have risen, gold has risen, Bitcoin has risen, real estate has risen, pretty much everything has risen. But there is a time when we start to get concerned about valuations. Are we at that time yet, or do you think we still have a few more innings to go?
Well, that's why I was looking at the value of these assets relative to gold. So price of copper at the low relative to gold. And then the same is true for platinum and palladium and oil. And it makes me wonder if the mining companies will finally have their day in the sun, because they've really struggled ever since the 80s. There was a huge move into natural resources in the 80s. Russia opens up. They've got egads of natural resources. And so the global shortages disappear. And now I'm kind of wondering if, having been an underperformer for 30-something years, that maybe they'll finally have their day in the sun. So it's something that I've been looking at and thinking about.
What about trading something like COPX versus GDX?
What is COPX?
COPX is the copper miners
okay.
ETF.
Then, I suppose that.
So this is the spread.
Yeah.
So if I look at it this way, this is basically the 1 year outperformance of gold versus copper.
Oh, so like a big catch-up trade.
Yeah. So that's the logic, is that there might be a little bit of a catch-up trade, or you could, potentially, trade something on a ratio. Buy a couple shares of COPX, maybe buy a put on GDX just in case the whole thing gets whacked out.
That might make some sense.
A sort of a pairs trade.
Yeah, I've never traded COPX. I've traded GDX, but not COPX. Is it a very big one? I mean, is it have a decent market cap?
This is the thing. Of course, it's not the biggest. It's $3 billion, so it's not tiny. Yeah. But this is not, compare that, for example, to the gold miners, which is $22.6 billion.
Yeah.
But it's not like we don't have 1 million people watching this show.
Yeah, that's true.
So there's enough liquidity for you, me, and whoever's watching.
Yeah, for retail, that's for sure.
Yeah. It just occurred to me that might be a way to kind of play it. Now, there's going to be some crossover, I am sure, because here we are. We're looking at because a lot of miners will, they're not like a one-trick pony. They don't start digging for metal. And they're like, oh, we only found silver, we only found gold, so we're not going to take those. These guys take everything they can out, and that's that. Yeah. So I'm guessing we have some fairly significant crossover.
Yeah, when you mine copper, you typically find gold and silver along with it. The Freeport mine in Indonesia also has molybdenum. Which is a hardening element for steel making. Mm-hmm. So that's pretty common. Silver tends to be a byproduct of gold mines, although I understand some of the silver mines in Mexico, Latin America are sort of pure play silvers.
Yeah, I know that a lot of these are relatively but some of these are sort of broader. I'm actually surprised that we've got no Freeport in there. I don't remember exactly what Freeport's gold production is.
Yeah, it's far larger in the copper side, it massively. Yeah. Mm-hmm. That was one of the companies I financed back in the day as well.
When in your ANZ days?
Yeah, they were a big they were a customer of the bank. Mm-hmm. I always wanted to get to the Grasberg mine. I always was told that up there on the top of the mountain, it was like looking into heaven. and I always wanted to go and
Really?
see because they just said it was absolutely gorgeous. Um, yeah, it's a strange place because essentially it's a mountain, and they're just taking the mountain down, and the whole mountain
Mm-hmm.
is a big chunk of of copper.
Mm-hmm.
And it was a heck of a engineering problem to turn that into a mine, and then it eventually became the lowest cost producer on the planet.
Copper Mountain, not to be mistaken for a ski
Yeah,
resort in Colorado.
yeah,
Um, well, this has been an interesting and sort of rambling but free-flowing conversation we've just had. It certainly gives me a couple things to think about. So our takeaways are, how would you summarize our takeaways from today's conversation?
Well, AI is getting into that space where, unless you're an insider, you don't really understand what's going on. I'm not an insider, and all the moving chess pieces are very difficult to figure out what's going on. All I do see is a lot of new little AI bots to play with every week, which is really hard to keep up with. But I like to play with some of these things and see what they do. Um, so that's one. Two, I think we're kind of in a strange world where everything just goes up. Nobody cares about the tariffs. Nobody cares about the government's been shut down, right? At least I should say in the investor world. There's nobody's getting worked up over those issues. So it seems like there's often days I go like, I don't understand why the market's up so much today, up another 1%, and then you think it's up. There's got to be a correction at here at some point, and then it's up another 1%, and then up another 1%. And it seems like, well, the economy is going to keep doing well, especially if there is all this huge capex, right? So all economic activity is just not consumption. Capital expenditures.
70% of it is.
Yeah. Yeah,
And a
70%
lot
of
of
it
those
is.
consumers are struggling.
Yeah, and they're struggling. But how about all that investment that's taking place? Well, that's adding to GDP as well. And I would say that's even better for GDP, because if you're making investments, you're expanding the productive capacity of the economy, whereas when you're consuming, you're reducing the productive capacity of the economy. So it might be a massive overbuild, or it could be building a new foundation for an economy that looks very different.
So
5
your
or 10 years.
logic is then that we have a lot of economic activity, big investment, which is generally good,
Yep.
and that investment is in essentially what could be meaningfully productive capacity, assuming that AI actually lives up to even a fraction of the promise.
The hype, yeah.
And then we should get more economic growth on the back of that, and the virtuous cycle of economic
Hopefully.
growth. So that's the positive story. So you're not a seller of equities at this point, in other
No,
words.
but as you talked about last week or the week before, my foot's hovering over the brake. It's it kind of gets nerve-wracking when something just goes up day after day after day, because unless you really have a good idea of why it's happening. We kind of have an idea of why gold's going up and why Bitcoin's going up, because there's just not a lot of confidence in governments out there. And so we can pinpoint to something fundamental that explains what's going on.
Well, maybe it's a good thing so I got a new phone yesterday. I don't replace phones very often. And I'm basically locked out of everything. So apparently I have some kind of kitty screen control on this phone. So all I can do is, this smartphone's actually a dumb phone. It all I can do is call and text with it. And what that meant was I couldn't log on to my personal brokerage account today, because overnight I was feeling certain degrees of anxiety about all of this and thinking I just might buy some SPX puts here.
Yeah.
I just need to do, but I couldn't do that because I can't get in. Oh, we have a question. Let's try to get to that question then.
Yeah, go for it.
Oh, Yeah, go ahead. Ask a question because we were
You
probably
type
about
it
to
in.
wind up pretty soon. But yeah,
Is
go
that
ahead,
an
ask
orange
us a
phone, by
question.
the way?
It is orange, although I'm going to get a screen protector for it, assuming I can get the thing to
Does
do
that mean
something
you're a
other than.
closet Bitcoin enthusiast?
I'm not a closet Bitcoin enthusiast. I'm an outspoken
Oh,
Bitcoin
okay.
enthusiast.
Because that's the orange phone there. Orange is the
Yeah,
color.
no, no, it's been part of my acronym challenge on CNBC for the last couple of
Okay,
years.
good.
So my top ideas for the last couple of years have included Bitcoin and continue Bitcoin and gold, frankly.
Cool. Now, is that question
Were
in?
key. We didn't get the question yet, so Jonathan Kwan, if you have a question,
Type
by
it
all
in.
means. So Black Mutt Video also, by the way, is saying BHP estimated in 2024 AI boom would double the demand for copper, which is another reason. So, yeah, I mean, copper is, I mean, it's an industrial metal. We use it for all manner of things. Obviously, it's an important input in the electronics. So, yeah, presumably there would be, continued need and use for it. There is always a base case need and use for it. Copper has a lot of utility for many things. It actually isn't used for some of them as often or as much as it once was because it became expensive for it. Copper was a popular roofing material. It's popular in plumbing. It was what pennies used to be made of. But it became too expensive for many of those.
Yeah.
You go into the modern home, and as much as anything, you're going to see a lot more PVC and a lot less copper.
Yeah.
And if you look on roofs, you're going to see a lot more asphalt and a lot less copper. And if you look at a penny, you're going to notice it doesn't weigh what it once did because it's no longer made out of copper.
Right.
So, all of that. Yeah, Jonathan Kwan, if you do have a question, or if anybody who happens to be watching has a question, by all means, go ahead and ask it. We can stick around for just a couple of extra minutes to try to answer it if you like. But otherwise, you can tune in for open mic tomorrow. And by the way, one other thing I would just add for those open mic things, Mark, anytime you want to join those, but I realize your class is... Oh, okay. So we have the question, but I don't see it yet. Oh, here we are. All right, so here's the question for you, Mark. What are your thoughts on holding an equity and doing a weekly put spread at the money and then doing longer dated covered calls and replaying the puts each week and rolling the longer dated covered calls when it's a 50% plus profit? So I'm assuming trying to structure, because it's a put spread collar, trying to do this as an even carry or even a positive carry trade. Jonathan, you can follow up, but I'm assuming that's how you would elect your strikes. We have a strategy kind of like that, by the way. I'm going to talk about that in a second, but what are your thoughts, Mark?
I don't know. I hate to give advice unless I've done and carried that. That sounds like a systemic trade to me. And so unless I actually tried it out and played the game for a year, I'm reluctant to say if that's a good idea or a bad idea because it's going to depend upon the strikes you carry. You do. Are you going to have positive carry, negative carry? Are you in a uptrending market or downtrending market? So I don't really have a strong opinion.
So I will say, yeah, I mean, here are my thoughts. First of all, we have a positive carry collared stock strategy that we run as an ETF called ULTY, U-L-T-Y. This is, I'm just going to show this really quickly. This is how this has returned. It hasn't been around for, I don't think quite I guess it has been. Let's see, how far back when did this actually get launched? February of 2024. Now, this is not necessarily representative because late last year, they put in a filing change so that they could introduce hedges. This was kind of a covered call thing, and now is a collared position. So if we take a look at how it has performed this year, this is a position that owns puts but tries to do so in a positive carry environment. So there's no, there's no cost effectively to owning it. So it sells upside calls, buys some downside protection, but does so in a manner that you're actually net positive theta. So remember, everybody, theta is the Greek. That is a measure of decay. If you are positive theta, that means that as time passes, all else equal, you're winning. And if you're negative theta, then and all else equal, you're paying out money. The only thing I would offer is this, and that is that in general, if you get into a positive carry situation, that usually means that you are short convexity on balance. Usually. Not always, but that's generally going to be the case. And that's okay. I don't object to that. I actually usually like it. I like trades that are positive carry. The only downside to such a trade is that when the markets get wobbly, those things it has a higher likelihood of behaving in a way that you don't expect. What do I mean by that? Well, let's imagine that you own SPY, and let's see if we can construct a strategy that looks like this, and just work through a couple examples of what could happen. So I'm going to just use SPY, and I'm going to say let's buy a near-dated put spread, and let's sell some longer-dated calls, and see if we can get to a situation where it has, at the very least, a standstill rate of return of 0, meaning that there's no cost to carry. And then what happens is we walk that call in so that we are positive carry. And then just take a look at how that works. So let's imagine you were looking at weeklies. So the thing about so this is an important point. Short-dated options decay as a function of their own value much more rapidly than long-dated options do. This isn't a big secret. I'm not revealing something profound there. So that means that the standstill rate of return of a short-dated long put spread in SPY is probably going to be quite high on an annualized basis. So today's the 6th. Let's just go, we're close to the middle of the week. Let's not go to the end of this week. So let's go to the end of next week, which will be the 17th, regular way. SPY is 670, so we'll buy the 670 puts. We will sell. I'm just going to use this as a starting point, so we'll adjust this momentarily. So we'll use something like a 25 delta. So we'll use the 658s, something like that. So we are now paying out $3.30 in premium to have this put spread on. Let's actually just take this a little bit further out of the money. We'll go 668, 658, something like that. All right, now we're going to add a short call, and we'll go further out in time. Let's, for the sake of argument, Tom Sosnoff and the gang, people like that, they like to sell 45-day call options, so why don't we pick an option like that? And, what option can we sell? Let's just say it was really, would be awfully tight, right? If I sold the 675s. Now this has 45 days to go. These have 10. If I'm losing, we're going to call it what was that number here? I didn't actually see. This was 530, 270. So we're looking at, we'll call it $2.50 over the course of the next 10 days. Could my November call lose that amount? What you see is that you're sacrificing, and we'll add some stock in here. So we have, this is what you're going to end up with, is a position that looks a little bit like that.
Interesting.
Yeah, I mean, it's okay. What I'm saying, though, is that you cap a lot of your upside gains in a structure like this for a relatively modest or nominal amount of protection. Now, you could say, okay, I don't want to do something that is, you want to sell the at-the-money, buy the out-of-the-money. Oh, okay. Now we're talking. So you want to sell, and you don't want to have stock then. So I'm assuming this is, you're thinking about, this is interesting. So what he's actually saying is he wants to sell this put and buy the out of the money put and then sell that call. So now we're basically, the only thing I'm a little uneasy about is I never like being naked short upside, or not that much. Anyway, the good news is that selling a call spread, I think what you're really asking is, this is a variation of an iron condor. And I might be more comfortable with iron condors. So selling upside call spreads, selling downside put spreads with, an eye towards collecting some premium fairly regularly. What do you think of that, Mark?
I now that I understand a little bit better. I think what he wants, he's trying to get an income trade, and since he's dealing with weeklies,
and he's holding the equity.
Yeah.
So he's looking for a little bit of an incremental income.
Yeah.
So
to enhance what he's doing, and so
yeah,
I'm a little old school. I would go with probably an iron condor, and go that way, because the iron corn for pure income plays, that's my favorite structure. If I think stocks are going to go to sideways to up, then I just tend to like cash covered puts. And ideally the stock is a $50, $60, or $70 stock and not a $500 stock, because then I don't like to write.
Yeah, this is interesting. So I want to bring this up really quickly. I think I mentioned it yesterday. On the covered call side, why I'm kind of with you on selling covered calls, even if I'm call spreads, even if I'm long the stock. We have a fund that sells covered calls in AMD, and it's called AMDY. Has, as of today, about $240 million in it. Here's the thing: in these names where there was concern that there might be idiosyncratic exposure to the upside, that these stocks could suddenly rocket higher for one reason or another, the portfolio managers and the trading team decided, we're not just going to buy stocks and sell calls. We're going to buy stocks and we're going to sell call spreads. That's going to reduce the amount of income and they do it on a weekly basis. That's going to reduce the amount of income that we collect from one week to the next. But what that will also do is that if something comes out of left field, something we did not expect, we are not going to have foregone everything to the upside.
Yeah.
And this is the interesting thing, is that lo and behold, we got this big deal in AMD. And let me go back to the beginning of, say, September. This is the total return chart. So this is a covered call fund. And you can see this is the total returns right here for the covered call strategy. And notice something interesting. That between last week on the 3rd, it was trading about $8. Now it's trading close to 10. Almost, 17, 18% returns.
Yeah, wow.
Selling weekly options in AMD. This would not have been possible if they had just sold covered calls.
Yeah, that's for sure.
Because, did the stock underperform AMD? It did. You sold upside. That's almost inevitable. But the amount by which it did is, so we'll put this in here. So the total returns, 29% here. Do I have this? Oh, that's the end of that month. Let's just go, maybe even just the beginning of this month. So the total return since the beginning of this month, 28.6% for that strategy. And we'll put this in here as well. And 23% in this one.
Yeah.
So this is a covered call strategy. You would normally expect it to get leveled when the stock rallies. Did it sacrifice? Yeah. It gave up 5% of the upside. Now, if the stock had just trended sideways, this would have outperformed. But I do want to say, Jonathan, that depending on the stock you're looking at. Now, there are some stocks where you don't have to worry about it. ExxonMobil is not likely to be taken over. So Tesla, it's not going to be acquired. I think we can be reasonable. It's a $1.5 trillion company. Who would acquire them and why? How would that be possible? That's not going to happen. NVIDIA, it's not going to be taken over. Apple, not going to be acquired, right? So there are names where you can hold the stock. The other thing about something like Apple is that you're not going to get much from selling a call spread anyway. So if you're going to run a covered upside strategy against a long, it's probably going to need to be a covered call anyhow because it's not that high vol. But in some of these other ones, the volatility is a little bit higher, and I might consider call spreads. So to Mark's point, iron condors, sell downside put spreads, sell upside call spreads. If you want to lean long delta, that's the way to think about it. Because a short put spread and a short call spread, the deltas could offset. You want to lean long, have a little bit of the stock as well. Why not? I'm with you there. So let's see. With the Heighten, or I assume that's how you pronounce Heighten Patel, with previous question, this would make older generations more wealthy just because they existed earlier. Isn't this unfair for new generations? Oh yeah, okay, let's see. Heighten Patel, I'm a bit confused about Bitcoin. Let's say my parents earn income in Bitcoin of 300 coins a year. And now I earn 30 coins a year. My children might earn 3 coins equivalent a year. Is coin deflating? Well, in the example you just provided, coin is not deflating. Coin is inflating because each coin buys more. So its value is going up, not down. I'm not sure if that makes some sense. And then as a follow-on to your question, this would make older generations more wealthy just because they existed earlier. Isn't this unfair for new generations? It's an interesting perspective, and it's one of the nifty things that gold had going for it, is that it was a form of real money, real currency, but its supply also grew. Mark, you used to have a great example. You used to say that there was the suit rule, that 1 ounce of gold would
buy you a suit.
Go ahead and tell us. Yeah, 1 ounce of gold would buy a good suit 100 years ago, and it'll buy a good suit today. And actually, if you look at a lot of items in price of gold terms, their stability certainly is a lot better than a lot of other forms of money.
Yep.
So it has been a good store of value. Now, here's the interesting thing, that if the money supply grows at approximately the rate of economic growth, then you shouldn't see too much deviation in theory about the cost of goods in that currency terms. Mm-hmm. The thing that is important, Heighten, I would say, is that basically the debasement of money means that people do not earn anything for saving it. If you put gold in the bank and you were paid interest on that, the gold was still the gold when you withdrew it a day, a week, a year, or a decade later. And if you were earning 4 or 5% on that, I don't remember what the banks would have paid in 1910 in terms of interest, but you were earning real money. You were getting real income. Whereas now, when the interest you are getting is basically to offset the debasement of the money. So you're really just getting a return of capital.
Yeah.
In that case.
I would. I don't really like the way he frames this question because he's speaking in terms of what he thinks is fair. I don't think that's the right way to think about this. 10 years ago, it was very difficult to transact in Bitcoin. There wasn't regulated exchanges. I remember I was going to try to buy some, and I would had to wire some money outside the country or to some exchange someplace and hope that I was dealing with an honest person on the other side who would send me some Bitcoin. You could have gone back 10 years ago. Who knew if it was going to survive? It was going to become a thing. It could have died. We could have discovered a flaw in the code or the algorithm or the approach, and that kind of thing.
It also required adoption.
And
I mean,
and
if people didn't
so
adopt it,
so those people were taking all kinds of risks that you don't take today. Every day that goes by, there's just a smidge more acceptance, and the market gets a little bit deeper and more liquid. That's why we see, I think, the volatility falling, where it used to be a 100 vol asset, and then it became a 70 vol asset, and then it became a 50 vol asset, and it's kind of a mid 30s vol asset now.
it's also a store of work. Money is supposed to be a store of work
Yeah.
as well, among other things. And more work is required to produce a Bitcoin now than it did. So I computationally, it's far more intensive. So I don't really think, the point I would make, Heighten, is that there are many things that are limited in quantity. There is a limited amount of water on the planet. There is a limited amount of arable land. Now, we can do things to increase it. In the case of the Bitcoin, there's a limited quantity, and that is hard and fast.
Yeah.
But there are other things that are also of limited quantity, and that where there might be some ability. I mean, you could say, well, this is a limited amount of beachfront. Now, you could do what the Chinese do or what they did in Dubai, and you could start making islands, right? But in reality, you can't materially change what's there. And it is true that if you have more people, then it might be harder to come by some of those things. In fact, that's generally the case of it. And think about it. How many times has everybody listening, or any of us, heard, buy land, they're not making more of it? It's like one of the oldest sayings in the world.
Yeah.
Well, that's the same thing for Bitcoin. They're not going to make more of it. It's a fixed number of them. The circulation is increasing very slowly, but the total number is predetermined. And then you just use that as basically, in order to understand how everything else is moving, you need at least one frame of reference that isn't.
Sure helps.
And that's what Bitcoin is. Well, yeah, to your point. Yeah, I mean, could you tell if you were able to estimate how much other things were moving, I suppose. But it sure helps to be able to understand how the world is moving around you if you have one frame of reference that is remaining fixed.
Yeah.
So with that, we've been at this for about 90 minutes. We appreciate all of you coming in and watching this and asking your questions. And as always, I enjoy the conversations. I always find them helpful and insightful listening to Mark. So I hope you guys come back and join us next week, same time, when we have another conversation like this. And if Mark's able to pop in or out on one of the others, hopefully he will.
Okay. See you, Mike.
Take care, everybody. Thanks for watching.